a lot of the economists are pushing what they call the next macroeconomic shock out a bit further. It's sort of late 26 to early 27. What's the role of the platform in the kind of macroeconomic shock place? I know. What are you thinking about in that when you're seeing there?
I think it's really important that advisors have clear access to data. I mean, we've seen so much more volatility recently, and I mean that came through in our latest advisor pulse check too. It's now risen up to be one of the top 3 concerns. So yeah, access to data and then the tools to actually execute would be.
I think timeliness to data is critical for that, and accuracy of the data as well. I think we saw during Liberation Day, to bring Trump into it, but during Liberation Day, obviously we saw a lot of elevated trading activity. And what we didn't see on the platform to a whole, we saw elevated trading activity, but we didn't see massive volatility in models going, rebalancing and repositioning themselves day in, day out, etc. So we saw a lot of probably controlled changes being made because it was so volatile. It was up and down, and so a lot of people sort of sat and ended up in a slightly better position than it was 20 days prior. So that's quite impressive from an investor perspective to sort of chart your way through that storm. We saw it. But I think data, the accuracy of data during those times is critical to make real decisions.
Well, if volatility is a new norm, Anna, and I think you're right about that, what do you think the clues are in the research about how people should react in volatility?
I mean, that's definitely a conversation for an advisor to have, not financial advice. But, a lot of it is about managing the client's expectations and basically just reassuring them that everything is going to be okay if they can ride out the storm, because if they sell at a low, that's really where they're going to actually lose their assets.
Did you see much of that, Denis? People selling at the wrong time?
We saw some. I spoke to a couple of advisors, but one in particular, he said he had some clients who just said, look, I can't.
I'm out.
I don't like the stress of it. And obviously there are different stages of their life cycle, but we didn't see wholesale movements to cash, for example. So I think a lot of people understand and probably getting better educated than they ever have been in the past because of superannuation, exposure to markets and exposure to investments for a longer period of time. People do understand you have shocks. Whereas a GFC event, you don't want to sell in the middle of one of those events. That's when you ideally are looking for where the opportunities are.